Hi, I'm Emile Flowers with the Divorce Lending Association, and I'm a certified divorce lending professional or CDLP. This is part of our divorce literacy series, and today I'm here with Jason Wamsganz, who's with Partners Insurance. And I got to tell you, I've met with Jason a couple of times, and I really enjoy our conversations, which probably seems funny talking to an insurance agent from a lender's perspective. But I really think that the way he works and the way he does things is just truly unique, and the care that he takes, it just blows me away. So Jason, introduce yourself just a little bit. Tell us a little bit about yourself and what you do.
Sure thing. Well, I guess, yeah, first of all, Emily, thank you for the introduction. Very kind words. And I look forward to our conversation today. So like Emily said, I'm Jason Wamsganz. I'm with Partners Insurance. We are an insurance brokerage specializing in home insurance, auto, and life insurance. Been in business for 14 years. So hard to believe it's been that long already. But we've worked with over 5,000 households. So naturally, we've run across a lot of situations. I've seen a lot of claims in divorce situations in particular as well. So I understand insurance is not sexy. A lot of people don't like to talk about it. It's just kind of one of those items, you check off the list, you get done. But people tend to want to talk about how to make money, but they don't really like talking about how to not lose money. So not very fun. We get it, but kind of one of those necessary things. But it's funny if you look on like YouTube, you'll find people who are advising on making money, stock market financial advisors, and they'll have millions of subscribers. If you look up the top insurance channels, they've got about 20,000 subscribers. So it kind of shows you how interesting it is. But that's what we do.
Okay. Well, and I know that you're kind of downplaying it. You and I have talked a lot about different ways that, insurance can save you. And the way that you communicate, I really want to focus on this because you aren't the guy who gives you the insurance and disappears. So I really kind of want to focus on that a little bit because you'd be surprised when you go buy insurance. I know from my experience, there's a ton of lenders out there and bankers and stuff, and they're just kind of order takers. And insurance agents kind of tend to be the same way by default. Um, in your case, you're not really like that. You're kind of a guidance and education person like myself, and you definitely do not disappear once the insurance has been paid. So tell me a little bit about that.
Yeah. So, communication is huge for us. And I guess maybe I'll back it up just a little bit, give some definition to it. So, I mentioned earlier we're a brokerage. That some people may know what that is, some people not. So it's probably important first to kind of define what it is. So there's two main channels to purchase your insurance. One would be a captive agent. It's what we refer to as a captive agent. So these are sales people who work for an insurance company, right? So think of like State Farm, Allstate, Farmers, companies like that. You guys all know these companies because you saw 27 ads before you had your morning coffee this morning. These are all fine companies. There's nothing wrong with them. They're great companies, been around for a long time, but it's just not, in our opinion, the most optimal way to purchase insurance. So that's what a captive agent is. So a broker, or like what we are sometimes referred to as an independent agent, these are agencies that work for clients that help them find the best fit with whatever insurance company that may be. So we're not employed by the insurance companies. I guess kind of think of it as like an Amazon, right? We sit there to match the buyer and the seller together. And we do that by asking questions and finding the best fit. There's no one insurance company that we're going to recommend every single time. So obviously there's differences in rates. Obviously everybody wants to get a good deal, but then sometimes there's unique situations with flood insurance or earthquake, or the age of the home and things like that. So just want to get that out of the way real quick. So that's what we are. We're a brokerage. As far as is communication, yeah. So we're after the sale, we're typically going to be in contact with our clients 5 to 10 times per year. We've really kind of honed that in. We want to be in contact. We don't want to be a pest, right? But we want to make sure that people know that we're there, and know the resources that they have. We put a lot of time into creating these resources for our clients. So it's important for them to know where to go, whether it's our website or downloading our app or good old fashioned phone call, which many times works best to talk through that situation. So, one of the most impactful things that we do in those touches every year is our annual review. So our annual reviews go out. They're going to go out a couple months before the renewal every single year. And that's meant to really touch base with our clients. We're uncovering changes to the property as well as life changes. So changes to the property, you finished a basement, put a deck on, a new roof, anything like that. And then life changes would be, you switch jobs, birth of a child, soon to be 16-year-old driver, and kind of preparing for that. So many times when these things are going on during the year, people just don't think to contact their insurance agent. So we're not going to kind of leave you after the sale and say, hey, call me if you need anything. We're going to proactively have that communication with our clients.
Absolutely. And I know you have a newsletter too, because I've written for it before, which is kind of unique for an insurance agency. Speaking of life changes, tell me about insurance and divorce. That's what we're here for today. It becomes something that is probably not the first thing that's talked about, but is definitely going to need to be talked about. So tell me a little bit about that.
Sure. Yeah. So it's really in setting up the policies is kind of the first place to start. So if the policies are set up correctly in the first place, it makes this a lot easier. But assuming that they're not, or there's some changes along the way and we need to make some changes, we can deal with that. So I guess for the we'll attack homeowners insurance first. So homeowners insurance doesn't necessarily have to have both of the spouses listed as named insureds on that policy, right? A lot of times they're not listed because of whatever reason, right? Number one, it's not required. Number two, insurance is very credit based. People might not be aware of that, but the weight that your credit score holds on how much you pay for insurance is significant. It's one of the heaviest weights other than, your claims history.
Good to
Okay.
know. Yeah.
So a lot of times we're going to have the spouse on there that has the higher credit score, right? So that's going to make that premium a little lower. We don't have to add that second named insured. Sometimes it's just an agent forgets, but it's not something that's required on the policy. The problem with that is if they're not added and they're separating or divorcing, whatever's going on, if the spouse calls us and they're not listed as a named insured, they can't get any information on the policy. They can't ask any questions. They can't change a billing address. All of those things are required kind of during that process of separation. Maybe somebody's temporarily at another location and they need the billing to change, right? It's this spouse handles the billing, they pay the bills. So that's one. So that is a point of contention. If we have a spouse that's not listed on the policy and they call and they're not able to make changes or get information, they're upset, right? And so we have to explain to them why that is, and kind of diffuse that situation. The only way around that is to now ask that other spouse who is on that policy their permission to add the other spouse, right? And now they have access to the policy. So that obviously that can be very touchy. We've had situations where if people are still talking, if the couple is still talking, if they're communicating, it can be easy to resolve. In situations where they are not communicating with each other, obviously that's going to make it a little more complicated. So, on homeowners, definitely getting that set up in the first place. Where we see that happen as well, which I forgot to mention, is if one of the people owns a home, and then they get married later, right? And then a lot of times they get married, they don't think to then go back and add their new spouse to that insurance policy, right? So that's what we see a lot. One person owns the home, then they get married, that person's not added to the policy.
Well, and I think, my main issue is when I've got the other spouse who's going to refinance that's not on the policy. You know, is that going to be more expensive for them? Is that, because they haven't been insured before? Is that going to create gaps in insurance coverage? Those are the questions that I ask when I am working with my divorcing clients in that, discovery and negotiation phase. So how would that affect it if spouse A and spouse A's name is on, the mortgage and the insurance and everything, but spouse B is the one who's going to be refinancing? What are the dangers there?
Yeah, so typically with most insurance carriers, the lack of prior insurance for homeowners is not an issue. It can be. Usually it's not going to be a pass or fail type thing, but it could make the insurance more expensive. Um, you are going to face that a little more. You could face that a little more on the auto insurance side of things. That's going to be a little more touchy with if you had a gap in coverage. On the auto insurance side of things, it's significant. So if you do have a period where you had a gap in insurance, you could be looking at 25 to 100% price increase. So it's going to be very significant. Insurance companies obviously are very weary of people who would be driving uninsured. So they're making that assumption that during that time you were driving a vehicle uninsured. And so it's going to hit you pretty heavy there.
Okay. And then the gap, like transitioning from the mortgage from one to another, is there any danger there with a gap in coverage?
Usually it's not so much the gap, it's the missed items going from one to the next, right? So if it's getting refinanced, it's going under another name, it's got to be a new policy written. We can't just transfer that policy over. A lot of times that people have what we call scheduled items, so scheduled personal property. So think of things that are more high value that you have to put on there separate. So jewelry, art, antiques, firearms, those are the things that end up getting missed during that process. It's a stressful situation. People just want to get it done and they kind of overlook that. Even sometimes if they remember, it can be a pain because there's another step there. If you're doing that, if you're doing that new policy and you have those items, you have to have an appraisal that's less than 3 years old. So now you're going out and you're telling someone, hey, I know you're doing all this. By the way, you've got, these firearm collection and these collectibles and this art, and it's $50,000, $100,000, whatever. We're going to need you to go out to all these different people and get appraisals for them as well. Take those back, email those in. So it's a pain, and a lot of times people will kind of drag their feet, and it's not their fault. It's that there's so much on their plate at that time. It's easy to forget.
Yeah, I agree with you there. So thank you for clarifying that, because sometimes, we're not advising them on all of that either. We're just seeing that one person is insured and the other one's not, and then we're having to, figure out new insurance coverage, maybe even a new agent, things
Mm.
like that we haven't had before. So luckily, we have trusted advisors like you that we can send them to so that they understand, where the gaps could be and what the expenses are that go along with that. Um, Any other tips that you want to share today? Something maybe we're just not sure about. I know you and I were just having a conversation about appreciation in the market and new assessed values and how that could be affecting, everything,
Yeah.
everything. The mortgage market, the housing market, your taxes and your insurance.
Yeah. Yeah. No, great question. Yeah. For us, really, right now, it's, yeah, the inflation piece. Nobody wants to pay more than they have to, right? For their home insurance, their auto insurance. The issue we're seeing on the home insurance side, the property side, is the increase valuations, but also from an insurance standpoint is the increase in labor and material costs because of that, right? So we're concerned about what we're covering a home for to be fixed or replaced, not so much what that market value is. That market value represents what someone else is willing to pay you for the home, right? Where a rebuild or a fixed cost is what you're going to have to pay, a contractor to come do that work. So for us, like everybody else, inflation is huge. What if you've not looked at your insurance, your home insurance for quite some time, if it's been 5+ years, if there's not a couple of stop losses on there for you, which hopefully there are, you're probably heavily underinsured. And so we use two ways to do that. One is an extension, so it's a cushion. So let's say your home is insured for $300,000, right? We can put a 25% extension on there or a 50% extension. And that's just a real easy way of saying, hey, we've done the valuation, the rebuild cost, but we're going to put this on top of it just so we can have a little bit of that cushion for those inflationary times, right? And then the other one is it's simply known as an inflation guard. And so what that'll do is that'll add, a certain amount, 3-4%, which is not going to be enough right now in our times, but 3 or 4% per year will add that to how much you're insuring the home for. Those help. But when we're facing times like right now, they may not be enough. That goes back to that annual review. We got to have that conversation. We got to look at it. We got to make sure that we're keeping up with it. If you're not communicating with your insurance agent for 2, 3, 5 years, those are the types of things that really sneak up on people. So, I would just caution people, we want to save money because our money is worth less during this inflationary time, but not at the expense of underinsuring, one of our largest assets, which is going to be our home.
Yeah. Yeah. The experts say we're going to see anywhere from 5 to 10% in appreciation this year. So that's something to keep in mind. I got to tell you, Jason, I mean, I always enjoy talking to you. This has been very educational, not just for me, but I'm hoping everybody listening. And I truly appreciate you. If somebody were to seek you out besides calling me because y'all are, on my hot list, like emergency, hey, here you go. I give it to everybody. How would they get in touch with you?
Yeah, sure. So you can go to our website, partnersinsure.com, or you can email us at service@partnersinsure.com, or you can call us at 314-919-2001.
Awesome. Awesome. Well, I completely appreciate having you on. I'm so glad that we could take this time to kind of sit down and just take a little time to educate today. And you were the perfect person to do it. So I truly appreciate it.
Excellent. Well, thank you so much, Emily. I appreciate you having me on.
Absolutely. Well, thanks for coming. Have a
Thank
good
you.
day.
You too.